Okay, so Peter Schiff just dropped a pretty urgent market update. He's basically saying this could be the moment, maybe the last real chance before precious metals just gap higher permanently.
Yeah, he sees gold and silver almost like truth tellers, screaming about inflation, about currency issues that, maybe aren't getting the attention they deserve from the mainstream.
Right. And we're going to unpack the data, the big institutional moves that's kind of back up this warning. But first, seriously, if you haven't yet, hit that subscribe button for Credvia right now. You don't want to miss this kind of analysis.
Absolutely. Our job here is to look past the hype, the urgency, and really focus on the facts. What are the numbers telling us? What are the big players doing? Why are metals priced where they are now?
And the numbers are, well, they're pretty spectacular for 2025 so far. That's fueling the urgency. Gold, up 43%, just closed around $37.60.
And silver's even stronger, up 59%, closed above $46. That's a 14-year high for silver.
Wow. And platinum's the real standout, isn't it? Up 74% this year.
Exactly. And Schiff's argument is simple. These are not normal gains. This is the market saying loud and clear that inflation is nowhere near beaten. It directly challenges what, the Fed's been saying, what politicians like Trump have claimed.
It's the market basically calling them out.
Pretty much. The metals are the proof, he argues. People are voting with their capital, moving away from the dollar.
And you see that contract starkly when you look at, say, Bitcoin. All the hype, the ETFs, but it's only up 16% year to date.
Yeah, and here's the kicker Schiff points out. Price Bitcoin in gold. When you do that, Bitcoin's actually down 22% from its August high.
So much for digital gold then, at least in relative terms.
Well, that's his take. He calls it a stealth bear market for Bitcoin relative to physical metal. He actually thinks this gap widens gold over $4,000 by year end, maybe Bitcoin back under $100,000.
Interesting prediction.
Yeah.
But it's not just the price action, is it? There's something bigger happening on Wall Street.
Oh, definitely. This is maybe the most significant piece. Morgan Stanley. They just blew up the traditional 60-40 portfolio model.
The one that's been standard for decades. 60% stocks, 40% bonds.
Gone. Or, well, modified. They've shifted to 60-20-20. Still 60% stocks, but only 20% bonds, and the other 20% gold.
20% gold. That's massive.
It's huge. And it's the first time, really, in decades that a major institution has formally structured a portfolio like this, specifically saying we need gold to hedge against high inflation because bonds, especially treasuries, aren't doing that job anymore.
So that's basically a massive sell signal for bonds.
You got it. Cut bond exposure in half. Where does that money go? Straight into gold miners. You see GDX, the miners ETF, already up like 120% this year.
And it forces other firms to follow suit, right? The herd effect.
Absolutely. The pressure is immense now.
Yeah.
Okay, and just quickly, before we get into the other big risk factor, Schiff highlights the political stuff around the dollar. If you find this useful, please take a second and subscribe to Credvia now if you haven't already, or keep getting this analysis.
Okay, so the political risk. This is the other big cloud Schiff sees hanging over the market. He's pointing to some potentially destabilizing ideas being floated in Washington.
Yeah, things like merging the Treasury Secretary and Fed chair roles. That would essentially end Fed independence, right? Make monetary policy purely political.
And that ties into this ongoing Supreme Court thing, too, about whether the president can just fire the Fed chair.
Exactly. Former Fed chairs are pushing back hard, telling the court, look, independence is crucial, but if the court does rule that the Fed answers directly to the White House, well, Schiff's warning is pretty stark.
What does he say happens then?
He says the world's going to drop the dollar. If monetary policy can be changed on a political whim, the dollar loses its status as the global reserve currency. That's a potential currency crisis.
So you've got this twin threat. Market prices screaming inflation is still high, and political moves potentially tanking the dollar's value.
Right. Which brings us back to his main advice. Don't wait. Don't sit around hoping for some pullback in metals prices that might just never happen, especially with institutions now piling in. The time to position, he argues, is basically now.
So wrapping this up, the core tension is clear. You've got the market, especially precious metals, signaling danger, high inflation, currency risk. Then you have Washington saying everything's fine, inflation's handled.
Yeah. The question really becomes, which signal do you trust with your money?
That's the key question. If this analysis helped you get some clarity on that, make sure you're subscribed to Credvia. We'll keep bringing you this level of insight to navigate what's coming.